Welcome to the BF Anderson Technical Report for May the 18th. I attend 3 webinars every weekend. These webinars are quite lengthy. It's about a 2-hour deal, and I try to basically take all the information from the webinar and compress it down to about 5 minutes. Now, what we all want to be skinny, and we all want to be great at our craft. And we all want to make 250% in the stock market. But there's one common denominator, and that's discipline. In order to be skinny, you gotta exercise and eat the right diet. In order to be great at your craft, you gotta get up every day and put your shoes on and do the best work that you can. And in order to make money in the stock market, you've just got to use a strategy. So one of the things I picked up this week that I thought was interesting was an interview with Byron Wien. Byron Wien is an old-timer, been in the firm been in the business for a long time, and currently with BlackRock. And he was interviewed, and he was basically asked about what he thought about the economy and the market. And he basically says this. He says, earnings are better than expected. We are at full employment. Interest rates are still at record lows, and also inflation is low. So he is basically saying that this is almost like a perfect storm, that things do look good. Now, when he was asked about what he was worried about, well, he listed off North Korea. He's worried about North Korea. He's worried about China. He's worried about everything. We all worry about everything. There's always something to worry about. But then he was, and also he mentioned the White House, what was going on in Washington. But he listed his priorities as far as what things were the most important. And number 1 was corporate earnings. That is the number 1 factor that he focuses on. Number 2 is interest rates. Number 3 is the overall global economy. And then number 4, which is a distant 4, is what's going on in Washington. He refers to it as a sideshow. So basically what's happened here, it looks like we are in the beginnings of a potential correction. And I'm showing the NASDAQ here. We've got the 25-day moving average, which is in blue, and we have the 50-day moving average. And you can see that the NASDAQ has really been in a very strong uptrend, probably even got a little extended here above that 25-day moving average. But yesterday, as we all know, the market had a substantial drop. We pulled back to the 25 days. So actually, as far as the NASDAQ, it is still on a buy signal. Now, if we move into the mid-caps, in the mid-caps, you're going to see a little different picture here. We've got somewhat of a double top here. It really did not rally like the NASDAQ and has broken down below the 2 moving averages. Mid-cap size stocks just don't look as good. This is the New York Composite, which would be a lot of the banks. Now, one of the hardest hit areas yesterday was the financial stocks, and that would be heavy representation in this index. Again, you can see it really didn't rally like the NASDAQ, and it has pulled back below the moving averages. Now, the moving averages have not turned down, but they are breaking. Now, on the number of new lows on the New York Stock Exchange, we got 68 yesterday. The day before, we had 60. Now, remember, over 40 is concerning. The small caps, similar story. We're seeing a breakdown in the small caps. The small caps rallied really strong after the election, but basically have moved sideways ever since, and they too have broken down below the 2 moving averages. On the S&P 500, similar story, pretty much flat, and then a breakdown. Now, one thing I want to remind everyone on, and I'm having trouble here. I'll just explain it. Several months ago, I mentioned something called the 7.5% rule. Now, we got a buy signal on the 7.5% rule. Now, remember, this rule has only happened 10 times since 1980. And the general idea is that when the S&P 500 rallies 7.5% or more above its 35-week moving average, that gives you what we call the blast-off signal. So for the last 10, since 1980, the corrections have been very small. And the signal came at the S&P 500 at 2,365.38. So the average pullback since that buy signal, since that blast off signal since 1980 has been 2.5% pullback. Well, we got the signal at 2365. The S&P's at 2357. Barely any pullback at all. So the 7.5% rule is continuing to say that these pullbacks are going to be minimal. But we are having one, and if you have any questions, let me know. Now, I did want to mention one thing. We did have a little bit of turnover in the portfolio last week, having to do on new information regarding autonomous technologies. I'm really seeing a pretty common theme out there right now, which is software platforms, mainly cloud-based software platforms, continue to be a strong area, as well as anything to do with the autonomous car technology. Now, there's several players here. You've got Google, which has a program called Waymo. You have Apple, which is very secret. That's called Project Titan. And then you have Tesla, which has a program called Autopilot. So there's a lot going on in this area, and it really does look very promising for the long term. So if you have any questions, please give me a call. Thank you.